Okay, Dan, you and your colleagues can go ahead and do your introductions.
Thank you, Kazua. I am Dan Mahoney. I work for the Minnesota Farm Service Agency as a outreach and public affairs coordinator. I'm joined today by staff from the Risk Management Agency, as well as colleagues from the Farm Service Agency. And I would turn it over to Craig Christensen to introduce himself, and he'll be our first speaker here today from the Risk Management Agency. And then we will do introductions to the Farm Service Agency staff that are on the call before starting in with your presentation, Craig. So I'll turn it over to you.
All right. Thanks, Dan. As Dan mentioned, my name is Craig Christensen. I work with the USDA's Risk Management Agency. I work in the St. Paul Regional Office. So we work with Minnesota, Iowa, and Wisconsin. And we kind of manage the federal crop insurance program. So that's kind of what I'm going to talk to you about. So I guess I don't really have a preference. It may be easier. I basically am going to go through three things, and I can start sharing my screen here. Yeah, so I am going to talk to you today about kind of just the Risk Management Agency and the federal crop insurance program in general. Just give a general overview. Not go into too much detail, but I know a lot of times people aren't as familiar with us or with the program. So I'll talk about that, and then I can stop for questions. Then I'm going to talk about one of our programs that's tailored for specialty crop and local market sellers called Whole Farm Revenue Protection, or Whole Farm. And then also at the end, I'm going to talk about a new policy we have that came out through Whole Farm Revenue Protection, and it's called Micro Farm. So I will go ahead here and get started with kind of our federal crop insurance basics. So the federal crop insurance is kind of made up of like three different entities. We have the Federal Crop Insurance Corporation, and that's basically a government corporation that they administer the federal crop insurance program. It's made up of a 9-member board of directors, and their role is basically to approve any major changes to the crop policy. So if there's a new policy or plan, if we're going to make a major modification, it has to go to the board, and they have to approve any of those changes. Here at Risk Management Agency, a lot of times called RMA, our role is basically to manage the program, and we're made up of 10 regional offices. As I kind of mentioned, I'm in the St. Paul regional office. We also have 6 compliance offices. We have kind of the Risk Management Agency headquarters is in Kansas City. And then we also have people that work in Washington, D.C., and that's where the USDA's headquarters is. And then I guess the third group would be your approved insurance providers. And these are going to be 13 private insurance companies, and they're the ones that are able to write the policy. So we, as Risk Management Agency, don't actually work with the customers. They're going to work through these approved insurance providers, and the approved insurance providers are going to work with individual agents across the country. And this is just kind of map of our regions. And again, just reiterate, I'm in St. Paul, so we got Minnesota, Wisconsin, and Iowa are the states that we oversee. Just a little bit more detail of what we do. So at Risk Management Agency, we're responsible. So we develop and we approve all the policy terms. So things like your prices, your rates, like basically anything that's attached to that. A lot that's done in our Kansas City office mostly. And then we'll review it at a regional level. We're also, because it is, government subsidized, so it is kind of a government program. Our compliance office's role is to provide oversight with a goal of less than 2% improper payment. So basically, we don't want people getting paid when they shouldn't be, and we don't want people not getting paid when they should. So they kind of oversee that. And then another role of ours would be to review new products and program expansion. So things like an example I like to give is we were getting requests for insurance coverage for grapes in Minnesota. And so we were able to do that through a process called written agreement. But by doing so, we reached out, worked with U of M grape experts and talked with growers, and we were able to expand the program into 5 counties in Minnesota. So that's just kind of an example of one of the things that we do at the regional office, by focusing in that area and kind of getting to know the growers and what they need. And then, the companies, the approved insurance providers, these private companies, their role is basically to sell and service the policies. And they're able to do that through a contract that they have with a risk management agency called the Standard Reinsurance Agreement. And that sets the terms and conditions for them to be able to do that. So some of the advantages of this, public-private partnership is that producers can know they're covered. So even if there's a large disaster, you don't have to worry about like, well, is there so much loss in this area that these companies, or, there's just not going to be money to pay out the insurance losses. It has the full backing of the United States government. On the other hand, by going through private insurance companies, they're able to deliver, a more efficient service. And, as I kind of mentioned, the role at risk management agency is setting all of the terms for these policies. So these companies can't, compete on rates, like offering better, more discounts or cheaper prices. It's all determined through our processes. So really they're competing on service. And then finally, these are purchased through private crop insurance agents. And so by having so many agents across the country, producers are able to work with people that, are in the communities they're from and hopefully are more familiar with their type of agriculture and things in their area. So I got a link here and I can send these out if people want, but on our website, we have a tool called an agent locator. Risk management agency doesn't, endorse or recommend anybody, but it is a tool for producers. If they're interested in finding out where could I find an agent to maybe talk to, you can go to our site and use that to find someone in your area. This is just kind of a quick overview of the insurance cycle. Just for those who aren't familiar with it, maybe haven't ever had a federal crop insurance policy. So I'll try to go through it kind of quick, but I'm going to start actually at the very end here at number 11. That's the contract change date. And what that means is that any change of the policy and, rates, yield, anything like that we're going to change has to be done by a certain date. So say November 30th, that's a big one for a lot of ours. After that date, we can't make any more changes and that policy is now available for sale. So that's your insurance offer. Producers have until the sales closing date to purchase that insurance policy. So they'll fill out an application, submit it through their agent to the company reviews it. They'll accept that application, and at that time your insurance attaches. As we go through the growing season, you're going to submit what's called an acreage report, and I'll talk about what the equivalent that is for the whole farm revenue protection when I get there. But that's basically saying, okay, at sales closing date, this is what I'm planning to plant. By acreage reporting date, it's going to be, this is what I have done. So this is what we actually have out there and what we want to insure. The company will then create something called a summary of coverage. And what that's going to determine is your liability, or how much you're insuring. And then based on that, they're going to calculate a premium rate, so how much you're going to pay. And then that leads, of course, to the premium billing. As we get through the season, if there's damage to your crops, you would notify the company, and they would come out, do an inspection, take a look, make notes and do some measurements if they need to. And then once they get through that process, or could be at the end of the year, if it's determined that a loss was present, then there would be an indemnity claim paid. And then, that would end the insurance cycle. If there is no loss, there is an end of insurance date. And then it just starts over again for the next year. And so what our policies are going to cover? So what kind of causes a loss? It's going to be an unavoidable, naturally occurring event. So, the big one there on the top, weather. That's going to be things like, flood, excess moisture, drought, hail, excessive wind, things like that. And then we see and then with revenue policies, of which the whole farm revenue protection is, it can also insure you against a change in prices. So if you insure at a certain price, the prices go down through the season, that could end up causing a loss for you. So are there any questions? I can pause. If not, I'll move along to our whole farm revenue protection. I apologize, I do call it whole farm a lot, shorten it up, but so what this is. So this is,
There is a question, Craig.
yeah, sure.
Dan, can you help look into the chat? I need to do some technology help really quickly so people can get into this session.
You bet. Yeah, Craig, and in case you can't see the chat, the first question is this insurance coverage limited to producers who only have farm or land registered through the Farm Service Agency office? And then what about urban farms, warehouses, warehouse farms, greenhouses that maybe aren't currently registered with the Farm Service Agency?
Right. So that's a good question. I mean, with a lot of the programs, you're going to need to certify it. With whole farm, I don't believe that's a requirement. Because whole farm is revenue protection is based on tax records. It's a revenue based policy. And so the only way to really have documentation of what you're insuring is going to be through those. So with these, no. So not with everything. With many there it is, but not with everything. And I can, when I'm done, I'll go back and kind of confirm if I can get more detail on when it would need to be and when it wouldn't, because that is a good question. Do we have any others?
I have a question.
Yes.
It's kind of almost the same, but okay, just like on our farm, we just brand new. We've been doing it, but we went a little big this year. So this is our first year season, and we had some losses. It's only we didn't know we had registered our company last year. We haven't, I'm doing organic, we do organic farming, although we are not fully certified yet. We are still in the, with school, with partnering with the food group.
Okay.
Along the way, we'll get our certification, but I was wondering, like for last year, excuse me, we incurred some losses, but I didn't know we had a way of coverage. Do you guys have any coverage that for those people like us who incurred some losses, any kind of help to recover maybe some of the money we spent? And another question I have is, for me to get fully insured, do we qualify to get insured? I have to get that certification, and how do I get it through your agency?
So are you saying to be like to certify your acres with FSA, or when you say certified, are you talking about the organic certification?
What entails what processes do you get to get that certification? To get the insurance, for like now for our case, do we need to get fully certified to apply for insurance?
Well, I guess it's kind of like I said, with a lot of them, I know you have to certify your production with the company. I have to look at the rules because honestly, it's not an area I'm all that familiar with on, what's required for applications and, so basically certifying acres with FSA, and FSA, please step in. You're gonna go into your county office and you're gonna just sit down and tell them, I have this many acres of this many acres of that. And that's what I'm referring to when I say certifying your acres with FSA. And I know with a lot of our policies, to get full subsidy, you need to have a conservation plan. And again, that's something I can't speak in depth about, and maybe the FSA folks could. But so for certification, like I said, that's what I'm talking about, is registering what you're doing with FSA. With whole farm, I am very confident that that's not a requirement, because it's, like I said, we're not really basing it on, I mean, it is on an individual level, but overall it's looking at, you're certifying with your tax records. So does that help, or does FSA have anything to add, or am I not answering what you're asking?
I think I kind of got on that one. Maybe if I need more information, I can, you guys, you have your contacts. I will try to reach you guys out.
Sure.
Last question I will maybe add is, let's say if you have you are practicing in different counties, like I live in Chapin County, then you are doing in Hennepin, Wright County, and maybe Micah 3. How do you consolidate those? Do you guys do the same at the same time?
Could FSA help me out
I
with
mean,
that?
like, do I have to go to each county office to get that, or how do I get that? Like, if let's say I live here, but I practice my farming in like 2 different counties.
Yep. So as far as the Farm Service Agency goes, depending upon your situation, you will want to start with your local Farm Service Agency center, and then you'll let them know what farms you have, where your land is, and then they'll assist you with either creating a farm if a farm needs to be created, or adding you to a farm if there's already an existing farm. Say if you purchase land and someone else had certified acreage with the Farm Service Agency. So it's not an easy question to answer, because it all depends on your situation. But if you definitely go to your local Farm Service Agency office and let them know, there is opportunity to be able to, for instance, certify your land in other counties through have one county administer all those lands. So it would definitely be something that you want to discuss with your local Farm Service Agency, and they'll help you through that process to let you know what they need to identify those farms so you can certify them. And we definitely, if we can, want to have farms administered under one county for you, because that would be easier. We definitely, if everything meets the requirements that are needed, we definitely can do that.
Okay.
Samuel, thanks for asking all your questions. How about we connect sometimes tomorrow, so that I can help you get connected with someone from Farm Service Agency? Is that a deal?
Yeah, sure. That would be nice. Thank you so much.
Yes, you're welcome. Thank you for joining us.
Mm-hmm.
Okay. Yeah, thanks. So with the whole farm revenue protection, this is a program that came out of the 2014 Farm Bill, where basically Congress instructed RMA to develop like a whole farm diversified risk management plan of insurance. And so this is meant to be tailored for farms that grow, specialty crops or organic crops or livestock. And then those that sell to kind of your local regional markets or other kind of specialty markets. And what it does is it provides a safety net for all the commodities that are produced on your farm under that one policy. Oops, sorry. So, and we kind of talked about, what causes a loss. It could be a natural cause of loss. It could be revenue. So it's going to protect you against those kind of losses. One unique thing about this, so it's been available since 2015. And when it came out, it was the first crop insurance product that we had that was available in every county in the country. So what it covers, and that's really what's important, and I've kind of mentioned a little bit, but yep.
Craig, did you want questions as we go, or do you want to hold them?
We can do as we go, or I was thinking I would just break after I talk about whole farm before I move on to micro farm, and then kind of after each section I can take some, or does that work?
Whatever you guys want to do. I just wanted to know. Yeah.
Okay. Yep. but I honestly, if someone has a question, I don't mind stopping to do it. So,
Okay, then I'm going to ask.
yes, go ahead. Go
Well,
ahead.
can you go back to the next slide or the previous slide?
Oh, right here.
So 2 specific questions.
Okay.
One is the term commodities gets us hung up because so it's net for all commodities. And my understanding is commodities is specific kinds of crops or livestock. And so does this only cover commodities? And then the second bullet, it says specialty and or organic commodities. So what's prevented us from being a part of this program in the past is that we have such a diverse farm that we don't have enough commodities or enough specialty. And then all together, we have such an incredible diversity of what we grow and the kinds of livestock we have that it just, it's an untenable, nobody wants to take us. And then the second piece is in particular with pest protection. It says an unavoidable loss not due to insufficient control. Well, insufficient control is a very subjective, I mean, are they going to require me to have a scheduled spray schedule? And if I don't have that, then I don't get coverage. So for example, this spring we had a really early unusual caterpillar outbreak and we lost all of our apple crop, 4,000 pounds. But if I had known, if I had been on a calendar spray routine, I might have caught that, but I wasn't. And so we're struggling with finding a fit for us.
Gotcha. Yeah, and
I can never get enough specificity for us to be able to move forward.
Right. That's a lot. I'll try to tackle it. So eligible, yes. There's not a lot, and on the next slide, actually, I'm gonna scoot ahead one here. It talks about what it covers. And so it's basically animal like pretty much anything except if it's, timber, forest products, if you have animals that are for sports show or pets. Otherwise, any type of agricultural commodity would be eligible under this. So yes, and what you talk about is people, taking you in terms of, assuming you're talking about going to an agent and they see what's involved and maybe saying, yeah, it's not for me. Is that I've heard those kind of stories before. Is that kind of what you're referring to?
Well, I'll give you specifics. Rhubarb is not a commodity crop.
Oh, sure. But with whole farm, it could be listed. And if it's not, so anything that's not specifically listed in our commodity list can still be covered under an other category. So it could be like other vegetable or things like that. So it would be eligible in under this whole farm policy. So I think when you think commodities, you're thinking, is there a specific insurance policy for that one crop or commodity, right?
Well, I'm not looking for that. I'm looking for what I consider whole farm. But what we find is that because we don't have enough, quote, commodity crops, so I don't think you're going to be able to, nor do I want to take up the time to have you answer my specific questions. I think that the ultimate issue is that we've been unable to get in contact with anybody to answer all these questions and to work through the details of what we need for our farm. And I think everybody here is going to have a different farm and they're going to need the same thing. So that's the bigger question.
Right. Well, I mean, I'll go through kind of what this policy is. And again, if something's unclear, I'm happy to clear it up. In terms of eligibility, it sounds like it's something that probably would work, but again, I don't know details of your operation, but I don't see why not. I will have my contact information at the end here. So if people do want to know more about it, have questions about some of the details of the policy, I'm happy to do that. The one area I can't really get into is, would this work for me? Is this good for me? Am I eligible? Yes, I can work on that. Is it good? I can't really go down that route, but so we'll just try to see, like, I'll try to get through what we got, and I don't know, like I said, if something's unclear, let me know. So with this, again, it's going to cover all your eligible commodities, which is pretty much any agricultural type commodity, except for the ones listed here. And then the flip side of that, so all your eligible commodities that you do produce on your farm must be included in it too. So you can't say, I'd like to cover, these crops, but I don't really want to have these. Like, everything that you produce is going to be covered under that one kind of umbrella whole farm policy. There are potential replant costs. So if, something got wiped out, or you planted, it got wiped out, that's up to the company's discretion. I won't go into details on that, but it is an option. And then, kind of the important part is, like, so how do I know what I'm insuring? How much am I looking at? Like, what kind of liability, what kind of insurance coverage I have, and how much? So it looks at two different things. It's going to look at what do you expect to produce this year, and to do that, you would fill out something called a intended farm operation report, and you're going to list out, the commodities you're growing, what you expect to grow, or what you expect to yield, prices you expect to get, and so it's gonna calculate what the expected revenue is for the current year, and then it's gonna look at, well, what's your historic revenue, like what's your average revenue for basically the last 5 years. Now, it will look at the simple average of that, but there are also some calculations that are in place that account for growth. So if you've been kind of seeing an increase over that time, there is a calculation, an automatic indexing that accounts for that. So it will take your simple average and increase it based on that rate of growth. There's also an option for expanding operations. So if you physically added to your farm, added a greenhouse or added more acreage or things like that, the company can increase that average up to 35% to account for that additional actual physical growth. And so then it's going to look at, what do you plan to do this year, and what's your average historically, and then it's going to take the lower of those. So like, if your current year is just through the roof, it's going to be kind of limited by what your historical growth is. Or if you're looking at like really downsizing this year, it would take that into account too. So it's just kind of a check. Now, it's the lower of those two, but on the flip side, your historic revenue is going to be the highest number calculated looking at indexing or expanding or things like that. So this historic part will look at the highest number and then compare that to your current year. So that's how we determine how much insurance coverage you're going to have. Diversification on the farm does kind of affect this policy in many ways. And when we say diversification, what are we talking about? Well, we're talking about how many different commodities you produce, but we're not asking exactly how many do you produce. We calculate a number called a commodity count. And that is going to be a calculation. So it's not just a simple count, but it's going to look at how many commodities you have and then how much of each commodity. So basically, each commodity you have has to provide a calculated percentage of the expected farm revenue. So a certain amount of the overall total. For whoever wants to know that calculation, I can do that briefly, just give you an idea of what we're looking at. So if it needs to be 1/3 of what would be called, I guess, like perfect diversification. So a very simple thing would be, say you have 90,000 in revenue that you expect. Our perfect diversification would be 30,000. If you have 3 commodities, sorry, 30,000 per commodity. So 3 commodities at 30,000. Well, if we look at 1/3 of that, so that would be 10,000. That would be the minimum threshold that commodity would have to produce in value to be included in that commodity count. Now, if you have a lot of those commodities that aren't meeting that threshold, they're just, smaller, you can add those up together. So, say you have maybe, I don't know, of those 3 commodities, one of them is doing 75 and one's doing, 5,000. So that would leave the other, 10. Well, the 5,001 doesn't meet that minimum threshold. But if it was combined, oh, I'm sorry, yeah, I kind of mess it up. But 5 and 7, combine those, it's 12, that meets the 10. So you would have, that would be included in that commodity count. I hope that wasn't too confusing, but just because it doesn't mean you can't add them up and still have a higher level of diversification in that commodity count. And where this matters, oh, I'll get that next, sorry. Next is our direct marketed commodity. So we're talking about a commodity count. For some people, and this was new, I believe, for 2021. A lot of producers are, doing direct markets, and they can't figure, you can't really calculate out, well, I have this much of this crop and this much of this and this much of this. They're not able to break that out. And that was a big hurdle for people. So they came out with this direct marketed commodity code. So you can combine a bunch of these under this direct marketing code. It's going to count as 2 commodities when we're looking at that commodity count, regardless of the number of commodities that are included in it. So, you may have 7 or 8 different things. You can't really break it out, but your direct marketing, you can put those all under this code. It's going to count as 2, and we're just going to take the total of all those commodity are going to fit under that code. So the commodities, report as a dry, they're not, again, not required to have separate values. And I think hopefully that will help a lot of those people that don't have those records for those commodities to be able to utilize this under here. So going back to that commodity count, it's used in 4 different areas in the policy. So we're looking at, coverage levels, premium subsidy, eligibility, and premium discount. I'll go into each of those and kind of what that means. So coverage levels for this policy range from 50 to 85% coverage levels. So you can ensure, 85% of your total expected revenue down to 50. It increases in 5% increments. If you want the 80 or 85%, those highest coverage levels, you would need a commodity count of 3 or higher. There is no catastrophic level for whole farm. So like the catastrophic policies, a lot of times, for other policies would be, as an example, maybe 50% coverage at 55% of the price or value. There is nothing like that for this whole farm revenue protection. It's also going to affect subsidies. So one of the nice things about this policy is what's called our whole farm subsidy level. So if your commodity count is 2 or higher, the government subsidy towards your premium is going to be 80% of the total premium for coverage levels ranging from 50 to 75%. Now, if your commodity count is 1, you only have an eligibility of 1, that doesn't mean that whole farm's not available to you. I mean, there are certain instances, which we can talk about a couple later, but you can still have this coverage. You just won't reach the full subsidy amount. It's going to be closer to what a standard regular individual commodity policy would be. So you can see that here on that top line, your basic subsidy here. Your commodity count can affect the eligibility for whole farm. So if you have a commodity that has an individual policy with a revenue coverage available for it, you would need to have at least one other commodity in your commodity count to be eligible. So, very basic example is corn is a revenue policy. If somebody had a bunch of corn and they had a small amount of something else, but it didn't have, and they wanted it to do it under whole farm, say they had a, little bit of, pumpkins or whatever else, and it didn't meet that level to get them to a commodity count of 2, they wouldn't be eligible. And then potato farmers also have to have 2 commodities that they don't have a revenue policy, but for some reason there's something with potatoes that special makes it, you can't insure it alone under the whole farm policy. And then finally, there's what we call a diversification discount. So the higher your commodity count is, you're going to see an increased discount on your premium. So, as you get up, and that's up to 7. Anything above 7 is going to be capped, but the higher that commodity count, the higher your diversification discount is. That's going to go towards your premium. So that's not including that 80% subsidy. That's just going to be used in your premium calculation rate. So what causes a loss on our whole farm? Well, we've talked about, the natural causes of loss, decline in market price, things like that. So basically we're going to calculate how much you're insured for, which I kind of discussed, comparing that historic versus current. That's the amount of revenue that's insurable. You're going to select a coverage level, which I kind of talked about, multiply that by your total insurable revenue, and that is going to be your insured revenue. So that's how much you're insuring for. During the year, the revenue that you receive from the commodities that are insured is going to be summed up to be called your revenue to count. So if your revenue to count falls below your insured revenue, that difference is going to be your loss payment. It's kind of just as simple as that. There's no fancy calculations. Just I have $100,000 that I expect that that's insurable. I took 75% coverage. I'm insured for 75,000. All the revenue I got from this year came out to be 50,000. Your payment would be 25,000. One thing is, I did mention this is based on tax records. So before a claim is settled, your tax forms would have to be filed for that year. So for 2022, your 2022 tax forms would have to be filed before that claim would be finalized. So if this is something you're interested in, you went to an agent, talked to them, said, yep, I think this is a go. I would like to do it. This is not an exhaustive list, but this is just some things that you would need. So for 2022, you would need 5 years of tax records, and that would be 2016 to 2020. 2021 is what we would call a lag year. So that would not be included for the whole farm. It would be those 5 years previous to that. Now, there are some exceptions that can be made for beginning farmers or for veteran farmers. If you don't file tax forms, so if you're a qualifying person that's not required to file a U.S. tax return, one example is tribal entities. You don't need those actual tax forms, but what you would need is the information to be able to complete a substitute tax form that would have the same information. There is also an exception if a producer is physically unable to farm for a year. If you had a farm accident, ill, maybe a deployment, things like that, they can have an exception to that 5-year rule. When you go in, you're going to want to bring information, what you plan to produce. As I kind of mentioned, you're going to complete that farm operation report, and you're going to just list everything you plan to produce, what you expect to produce, and what that price is. And then any other supporting records. So if you're organic, you'd bring your organic certification in, inventories, things like that. And a lot of times, so how are the tax returns used? I think it makes a lot of people uncomfortable, sharing tax records, bringing them in, like, why do I need to do that? And again, this is a revenue-based policy. So it's what we use to calculate that allowable revenue for your historic farm history report. So again, that's used in determining your insurable revenue. And again, they act as your revenue history. So if anyone's familiar with our other policies, we have our actual production history, or APHs, based on the production that people report to their company. This kind of acts in the same way.
Hey, Craig, can
Yes.
I ask a question?
Of course.
So you mentioned that in order for a claim to be settled in 2022, you'd have to file the 2022 taxes. Does that
Yep.
mean if you get through October and you realize you have a claim, if it's a vegetable farm, you get through October, you realize that you have a claim, you file a claim, you wouldn't get paid your claim until sometime in the spring after you've filed your 2022 taxes?
Correct. Yep.
Okay.
And yeah. Yep.
And then the other question I have is there a worksheet available to producers that might be able to sort of outline this or prepare it in order that they can get
Yep.
an idea of how they're insurable or what they're insurable, and then before they show it to an agent?
Yeah, we do have some record keeping aids that you could use. I mean, I think they're kind of intended for, as you go through the year, something to track. But I mean, you could use that also to kind of help you to fill that out before and kind of get that calculation going. And
Sure.
yep, exactly. And the better records that you have for what you've done in the past, the better that the better it's going to be for filling these out. But it doesn't have to be perfect, but yeah, yep, we do. And I'll give you guys the link. I'll show you the link to our website. We do have some good, a lot of good information on there specific to whole farm. And actually we have a whole page. So I will definitely post that up there.
Fantastic. Thank you.
Yep, you bet. Just a quick timeline, what it looks like. And I kind of went through that insurance cycle earlier, so I'll kind of breeze through this, but the sales closing date for the whole farm revenue protection in our area is March 15th. So you'd have to purchase it by then. And that's when you'd submit your intended farm operation report. So what you're intending to do. By July 15th, you'd be submitting a revised farm operation report similar to that acreage report. So that's not what I intend to do, but this is what I did. And then finally, you would file a final farm operation report at the end of the year. If you have a claim, that's going to take care of that. But if you don't, you would want to fill this out. I will note that it's not required if you don't have a claim. But if you don't file that before sales closing date of the following year, you would be limited to a 65% coverage level. So, we have this whole farm revenue protection policy, and our friends from, yep.
Sorry to interrupt you, but
problem.
just before you move deeper into this,
Yep.
there's two questions in the chat, and Lori,
Okay.
I might have to ask you to unmute yourself to elaborate. Lori's question was, I think, asked like 3 or 4 slides ago, but the question is, why is it 3? How did that get calculated and why? And what if I only produce specialty carrots? Subsidies cover single crops for other farmers that do not sell direct. I'm not sure if you want Lori to elaborate on that comment and question, so you can properly answer or not, but I'll let you two take it from there.
Sure. I can try to answer that. And Lori, if I'm not answering your question, then please jump in. So your question is that you have only specialty carrots. And so the question is, you wouldn't have that whole farm subsidy because it's only the one commodity, correct?
Right. And so I'm trying to think to myself, let's say I go to Carver County's FSA office and
Yep.
I look for this and I'm only selling specialty carrots, yet you had kind of a minimum of 3 there. So I'm trying to figure out why 3 in our situations when we know that other row crops, single crops get covered.
Gotcha. So the minimum of 3 is to get these higher coverage levels of 80 or 85%.
Okay.
And I think that when they created the default, with a higher commodity count, it's a little, more risk spread out, and they're a little more comfortable going with those higher coverage levels. I think, typically 75% for something newer is pretty general. And then as far as the subsidy goes, these subsidies for the one commodity count, while they're not the 80% under the whole farm, they're much more in line with what your general commodity subsidies are.
Okay. Thank you.
So, yep, you bet.
And then Craig, the other question is from Cindy, and it's, does whole farm revenue only cover income from raw agricultural products, or does it include loss of income from value-added products?
Okay, so with whole farm, it does not include the value added. That is not going to be insurable. When we get, as I move on to micro farm, that's different. That would be a different answer. One thing it does cover, and I don't remember if I hit it on the slide, I had it listed, but I think I was talking about something else, is it will cover things for resale though, up to 50%. So if 50% or less of your revenue is from the resale of things, those would be covered. I know it's not exactly what you're asking, but I did forget to mention that. So but yeah, the value added. So you're growing your strawberries and you're selling as jam. It's going to ensure what the value of those strawberries are, not what the value of that jam is.
And then this is Dan. I just want to clarify that when we're talking about both whole farm revenue and micro farm, this is a federally subsidized crop insurance. And if you are seeking coverage under these, you're going to be doing that through a crop insurance agent, not through the local farm service agency. And then we did put that agent locator link in the chat for identifying potential agents.
Yep.
So Dan and Craig, who do we go to get the plethora of specific questions about our particular farm operation and whether or not things are going to be covered or not covered, and get actual numbers that we can make an intelligent decision about whether or not this is something that's going to work for us? Who do we go to? FSA, or do we go to an agent?
It depends what you want. And FSA is going to talk about their programs. So again, and you can, if you're trying to make decisions and you want more information before you go to that agent, you can go to our site and you can contact me, and I'm happy to guide you through that. There is a lot of good information, including we have a calculator on there that can give you an estimate, kind of what your coverage would be and what your premiums would be, and things like that. I mean, if you have the information. But yeah, if you're looking for advice what to do, like I said, for ours, it's an agent, if you're looking to purchase. And so with that, so we are kind of talking about all of our other options, right? So I know FSA, Farm Service Agency, they're going to come on next and they're going to talk to you about their non-insured crop disaster assistance program, or NAP. And so, people kind of I've gotten questions, like, how does whole farm revenue protection work with NAP, or how would that work if I wanted to insure some of my crops under another federal plan, under the Federal Crop Insurance Corporation, or FCIC? How do they affect one another? So I guess with the FCIC plans, and those are your federal crop insurance plans, you are allowed to have whole farm revenue protection along with one of those policies. You just have to not have it at the catastrophic level, which I'd kind of mentioned. And so any indemnity that you got, though, from those plans would be considered revenue to count. So you wouldn't be double dipping and getting paid if that crop you're insuring through an individual policy was the one that had a big loss. You wouldn't be getting indemnity from that and from whole farm. Or, I mean, you could if your whole farm had a loss above that, but your indemnity from that is going to count as revenue for whole farm. On the flip side of that, because you are insuring it under another policy, thereby reducing the risk, you would see a premium deduction. And so when they're calculating out how much you're going to pay for your premium, and this is for the premium calculation only, I want to emphasize that, they are going to take your insured revenue that they've calculated, and they're going to adjust it down based on how much coverage you have with that individual policy, up to 50% of the total. And then they're going to base how much you're paying for your premium on that amount. So that doesn't mean your coverage level goes down to that, but the amount you're paying in premium is going to be based on that lower amount, because for the same reason that indemnity from there would count. So it's reducing the risk on your whole farm revenue protection policy. Now, if you were to have FSA's NAP, a policy there, you could do that in addition to whole farm revenue protection. And if you did receive a payment from that NAP policy, it's not going to take all of that indemnity and count it as revenue to count. It's only going to look at the amount that's in excess of your premium or your deductible. And that's going to be included in your revenue to count. So again, basic, simple example, $100,000 total, you took 75% coverage. So you have $75,000 in coverage, that your deductible is going to be $25,000. So if your NAP indemnity payment was less than that, it wouldn't be counted as revenue to count for the whole farm policy. It'd just be anything above that 25,000. Then that would be considered revenue to count for your whole farm. Some comparisons between the whole farm revenue protection and our other multi-peril crop insurance policies, MPCI. That's basically referring to all of our other federal policies. Is that we kind of mentioned this, it's kind of a downside is that if you have a loss in the fall, you're not going to see that indemnity payment until spring after the taxes are filed. And again, there's no catastrophic coverage levels available. Some of the advantages, I guess you could say, with the whole farm revenue protection is that you're able to use the prices that you actually receive for your crops that you're selling, like including your organic prices. So you have sales records showing I've received this amount of money for these crops that I've sold. So this is the amount that I'm going to use when calculating my expected revenue. So you're not limited to using prices based on speculative markets or just USDA data. It's not a blanket price used for everybody. If you have the records, you can use the prices that you actually receive. It provides a revenue coverage option for some commodities that only have APH policy. That's your actual production history. So basically it doesn't matter what happens with the price. If you have a loss, it's due to a yield loss. The price could go way down. If it's an APH or a yield only based policy, it wouldn't matter. So this provides another option that's revenue based for some of those crops that don't have. And then of course the subsidy levels of 80%, higher than our general subsidy levels, and the premium discounts based on the diversification levels. I can pause because that's all I have for whole farm. I was going to go on to micro farm, but if there's any questions. If not, I'll move to micro farm. So the micro farm policy, now this is new for 2022, and it's being offered through the whole farm revenue protection. And its intent is to provide additional options for small scale producers. So this has the same sales closing date as whole farm. It's March 31st, but it's 15th. I think that's a typo, sorry. March 15th. And it is one of the differences with whole farm is that it only requires 3 years of consecutive tax records as opposed to the 5. And that does include the lag year. So it'd be the 3 most recent years at a minimum. There are no replant payments with the microfarm policy. And then I just listed here this product management. That's the release that came out in, I would say end of November, that kind of officially announced it what it is, in case anyone was interested. So while it's offered through the whole farm revenue protection, it's actually a separate policy. So there are the whole farm revenue protection provisions, or that's basically all the insurance policy in there and all the rules. And then microfarm has its own provisions that kind of are an addendum to whole farm. So if the whole farm policy rules would apply unless specifically stated in this micro farm. I'm going to try to go through some of the differences between micro farm and whole farm so you can see what makes them different and what makes micro farm unique from the whole farm revenue protection. So micro farm, the eligibility, it's only available to producers that have a farm operation where you have $100,000 or less of average allowable revenue. The second bullet point talks there about for future years, it'd be 125,000 or less. Because this is a new policy, there are no carryover insured. So your carryover are insureds, are people who had the policy in the previous year and are electing to keep it in place for the current year. So for this first year, it's going to be 100,000 or less as an eligibility limit. If you are a vertically integrated operation, or if you have any of your commodities that are insured under another policy, what I talked about where I was comparing them with whole farm, you can have other federal crop policies. With this one, you can't. So either of those would make you ineligible for this. And really the features of this, the big one here, it minimizes the underwriting and record keeping requirements. So you aren't going to have to report, you don't have to break out everything item by item. So every crop or commodity that you produce, you have to kind of fill out, unless you're doing that direct marketing commodity code, like how much you're doing and how much you're getting for it. With this, that's not required. You also don't have to report expenses which actually are something you do report under whole farm based on your tax records. And then another big one is that you can include those post-production costs activities as revenue to count. So washing and packaging commodities, value-added products like jam. With this, that revenue does count. That's another big difference from the whole farm revenue protection. So when we talked about, you know, commodities in that commodity count with whole farm, with this, it's you're just going to use one commodity code. It's the micro farm commodity code. In this image here on the slide, this is from our actuarial information browser, which gives you all the actuarial data. So that's going to be, you know, important dates, your insurance rates, things like that. And that is found on our homepage. And again, if anyone has questions on that, I'm happy to help you with it. So with that commodities, like as I said, we're not doing a commodity count for this because we're not breaking things out. So your commodity count's going to be equal to 3 for this policy for everybody. So that means that you're going to qualify for all the coverage levels and you're going to qualify for that whole farm subsidy level with this. There's just one across the board diversification discount. Again, we're not going up to 7 or going higher or lower. So that's a 0.523 for this. Not that that means much right now, but. And so as I mentioned a few times on our website, if you're interested in whole farm or micro farm, there's a lot of information. I got that arrow pointing there to the link that takes you to our whole farm revenue protection homepage. You can find a lot of things there, including those record keeping tools that I had mentioned earlier are going to be on that page. And then if you're looking for just a little bit more information, some basic information, we have a fact sheet for whole farm revenue protection and for micro farm. And then that agent locator that we meant. And I can, when I'm done here, I can copy those and put those in the chat too, so that everybody has them. And that's all I have. So there is my contact information. There is our office's contact information. I recommend if you have a question or if you're emailing questions to send it to both of those, just in case I'm out of the office for some reason. Then someone else will see it at that rsomn@USDA email and can get back to you sooner if I'm out. So,
Greg, there's a quick question for.
Sure.
Are there any coverage for cover crops?
Not for cover crops. Nope. It would have to be. You'd have to have an insurable interest. So basically, something that produces revenue.
Thank you very much.
Yep. Yep. So I can, let's see. How do I get back to the stop? Oh, there it is. Okay. Am I done sharing?
We can still see your screen there.
You can. Okay. Oh, stop share. There it is.
Yeah.
Okay. Got it.
Okay, and I think I'll just introduce Lisa Campbell, who will provide us a overview of the non-insured crop disaster assistance program that Craig mentioned.
Okay. And while I'm doing that, I'm going to pull up my slides as we go. My name is Lisa Campbell. I work with the Farm Service Agency, and I have been at the Minnesota State Office for a little over 2 years. Before that, I worked at a county office level, and I'm going to be reviewing the non-insured crop disaster assistance program, or what you may have heard of as NAP. It's going to be pretty basic because this program can be very specific depending upon the crops. But I do ask if you can hold questions until I get through the program or through the slides, because your question may be answered by a next slide. So again, this is going to be the non-insured crop disaster assistance program, or what we refer to as NAP. And the big question we get is, what is NAP, the non-insured crop disaster assistance program? What is that all about? So this program is an assistance program for producers of non-insurable crops to protect against financial losses that may occur due to the impacts of a natural disaster. So you're probably thinking, what does non-insurable mean? So as you heard from Craig, the federal government's risk management agency, or RMA, determines guidelines for crop insurance across the nation. And then local insurance agencies sell those insurance policies that fit within those guidelines. So if there's not a large scale production of a specific crop in a given area, then generally there's not commercially available crop insurance in that area for that specific crop. We do suggest that producers should always contact a local crop insurance agent in their local area to help determine whether crop insurance exists for the crop that you're planning to produce, because the non-insured crop disaster assistance program does not cover a crop that is covered by RMA, the risk management agency. There are many specialty crops like fruits and vegetables that do fall into this commercially uninsurable category. So while NAP is called Crop Disaster Assistance Program, it's similar to insurance, even though we don't call it that. So hopefully they'll make more sense as we go through the next slides. So what crops are eligible for the non-insured crop disaster assistance program? Any crop that's produced for commercial purposes, meaning for sale to others, not for personal consumption. If you have a home garden, those crops are not eligible for NAP. They have to be sold commercially. Crops for which there is no commercially available insurance product, as Craig had mentioned. If there's a specific insurance policy for that crop, it is not eligible for NAP. And we look at it could be also any of the following. So if the crop is grown for food, example, your fruits and vegetables, it may be eligible. If it's planted and grown for livestock consumption, so grains and forage crops, which include native forage, it may be eligible. A crop that's grown for fiber, and we're talking about cotton and flax, not trees. Crops that are grown in controlled environments, so mushrooms and floriculture, which would be the flowers. Specialty crops such as honey and maple sap are another examples of crops that are eligible for NAP. We obviously cannot list all of them because there are so many more. For instance, Christmas trees, turf grass sod, seed crop where the propagation stock is produced for sale as seed stock. The list goes on and on. So this slide has some examples of NAP eligible fruits and vegetables. We do see a lot of these on the slide that are listed on the slide, but again, it is not in any way, shape, or form all inclusive of the crops eligible for NAP. So aronia berries, which are also referred to as choke cherries or choke berries, apples in some counties are eligible. We do have insurance policies available in some counties. So again, you would want to check with your local crop insurance agent. The same for grapes. Some counties have grape coverage. Tomatoes is a big one. We see a lot of pumpkins and squash and strawberries. So as I said, this is just a small list, but there are lots of others that are eligible, that may be eligible for NAP. So as I mentioned, the non-insured crop disaster assistance program, NAP, can be looked at as an insurance policy. And when you have the coverage, if you have an eligible loss, we are talking about natural disasters such as drought, freeze, hail, excessive moisture, excessive wind. It could also include adverse natural occurrences. So flooding, excessive moisture in one area causes flooding. And then other conditions that may be an eligible cause of loss related to damaging weather or adverse natural occurrences. So excessive heat, plant disease, and insect infestation. The thing to remember about the third bullet is those conditions have to be tied to one of the other previously mentioned eligible causes of loss. So for instance, heat, if it could be tied to drought, then the heat would be eligible. So there are standards in the program rules as far as what the definition of a drought is, what the definition of a flood is, and what the definition of a freeze is. So freeze is not frost. So that's one that gets confused a lot. But you want to sit down with your local farm service agency office in your area and discuss what occurs to your crops to see if it would meet the eligible disasters, which could be an eligible loss under the non-insured crop disaster assistance program. And then the damage, the loss, it has to occur during the coverage period of the crop. So if it happens before you harvest your crop or during the harvest, it might be eligible. Again, it depends on the situation, what happened. If you harvested your crop and you have it sitting, you haven't shipped it yet, and plant disease occurs, that is not covered because it's after the crop has been harvested. So again, there's a lot of things to remember about the program, and it's very hard to give a cohesive explanation of the program based on what may or may not occur and what may or may not need to happen in our policy for the program. So how does the non-insured crop disaster assistance coverage work? It's similar to insurance coverage. You can get what we call basic coverage, where you receive assistance on losses that would exceed 50% of your expected production at 55% of the average market price for that crop. You do have a NAP service fee to acquire NAP coverage. It is $325 per crop or $825 per producer per county. So if you have crops in multiple counties, you can only be charged up to $825 in one county. And if you have coverage in another county, combined, you cannot exceed a total of $1,950 for a NAP service fee. So if you're just going to get NAP insurance on, example, your tomatoes at the basic coverage level, it's going to cost you $325. If you want coverage for your pepper plants as well, then it jumps up to $650 total for both. And if you want coverage on your strawberries as well, that's when you're going to max out at that $825 for the 3 crops. And the maximum amount that can be charged, as long as these crops are grown in the same county, is $825 for your service fee. With that being said, there is a special note. So if you are a beginning farmer, meaning you have not operated a farm for more than 10 years, and you are substantially participating in the operation, you may be eligible for a service fee waiver. Or if you're a woman or a member of certain groups, ethnic groups, a veteran, you may also be eligible for a service fee waiver. So the point is that the NAP basic coverage can be free And you should ask about that. Ask if you qualify for a waiver for the service fee. And then in addition, if you choose buy-up coverage for which premiums are then charged, your costs may be reduced due to your classification as either a beginning farmer, a woman, if you meet one of those ethnic groups, or a veteran, as noted on this slide. And I will discuss a little more about buy-up coverage in a later slide. So here's what basic coverage looks like. Losses that are over 50% at 55% of the average market price for the crop. You only need to pay a service fee to get this level of coverage, again, unless you fall in one of those categories where the service fee is waived. You can get buy-up coverage beginning in the 2020 crop year. For buy-up coverage, you have to show you have previously grown the crop. So you may be asked to bring in production if you have previously grown it. If you've previously had coverage under our non-insured crop disaster assistance program, more than likely we already have that and you meet it. But again, be aware if you elect buy-up coverage, you may be asked to show or document that you have previously grown the crop. But for buy-up coverage, you can get coverage, you can extend your coverage from 50% all the way up to 65% of your crop. And that goes up in 5% increments. And that would be paid at 100% of the average market price. So by paying the premium, again, you're paying that premium for the coverage for buy-up. We're not going to go into detail, but to arrive at the cost of buy-up coverage, we look at a formula that looks at your share of the crop. So if it's all 100% you, it's all going to be on you. The number of acres of the crop you've planted, your approved yield per acre of the crop, the coverage level you want. So if you want, say 55%, we'll look at that coverage level, the average market price for that specific crop. And then we take all of that information and we multiply it by 5.25% to come up with that premium fee. And again, keep in mind, if you meet one of those special categories, if you're a woman, a veteran, beginning farmer, you could be charged a lesser premium fee. So never be afraid to ask if you meet waiver eligibility. Your local Farm Service Agency office should be able to assist you in determining that. So what do you need to do if you choose to apply for the non-insured crop disaster assistance program? So the first step is, if you don't already work with the Farm Service Agency, and if you don't have a Farm Service Agency farm number, that's where we're going to start. We're going to need to establish a basic farm record at your local county, your local Farm Service Agency office. The local staff will assist you with this process, but we do want you to know that you need to be prepared to provide either a deed or a lease. So if you purchase land, bring that deed in so we can find it. It might be in our records, or if you're leasing it from another, from an owner, bring that lease in, and that's going to show the Farm Service Agency that you have permission to look at that farm information. Or it's going to tell us you purchased this land, it's never been certified with the Farm Service Agency, so we need to create a new farm for you. So depending upon what you bring and what the situation is, could depend on how much or how least amount of work needs to be done to get started for the non-insured crop disaster assistance program. This slide is very important. We cannot stress enough that deadlines are very important in this program. You need to apply for coverage by that application closing date. We do our best to mirror the application closing dates for the crop insurance. So if I know a big one coming up is going to be our annual crops. March 15th is a big one. However, if you have strawberries, that application closing date was September 30th of 2020 or 2021 for the 2022 year. So make sure you're informing your local farm service agency office what crops you have so we can determine what those dates are. And again, it's generally those application closing dates are well ahead of when you're going to start growing your season, but it does again vary by crop. You do need to report acres of the crop that you planted and any other relevant information. So the date you planted it, what variety is it? If you planted pumpkins, did you plant just jack-o'-lanterns? Did you also plant ghost pumpkins, mini pumpkins, sugar pumpkins? We want to know what type you planted and how many acres of that specific variety you planted and the date it was planted. So be prepared for that information. And then you need to track your production as you harvest it. A lot of people harvest for instance, farmers markets. So keep track of when you're harvesting those crops. What date did you harvest? How much of it? What was the weight of that crop? Because after you've completed your harvest of your crop, we want to see those production records, because when we make your approved yield histories, we want it to mirror as close as possible to what you're producing, because you should be paid based on what you're producing. And if you're not providing your production, you get a certain percentage based on what information we have for you. So there are several steps to the application process. There's a lot to keep track of. We do provide when you sign up for coverage, we do provide a CCC 471 non-insured crop disaster assistance BP basic provisions. So this is, I think, a 14-page form. It has a lot of writing on it, but please read that. That helps you understand the NAP program and what you need to do, what you need to meet for each step of the crop you're growing to report to your farm service agency. And if you have questions, you can kind of look through there and say, well, I have a notice of loss and it says I need to report it by this time. Can you help me? So it's there for you to help understand the program you're enrolling in. So what happens if you actually have a disaster and you have coverage under the NAP, the Non-Insured Crop Disaster Assistance Program? It's very important that you notify your local farm service agency office in a timely fashion. For some crops, that notification has to occur within 15 days of the disaster, and others, it must occur within 72 hours of when it happens or when the loss becomes apparent. I have always, the people I've worked with, I have always told them, just as soon as you notice that loss, as soon as you notice the disaster or it becomes apparent, contact the local farm service agency. I would prefer you think everything needs to be notified within 72 hours. So that way you meet those requirements and you're not thinking you had 15 days when in fact you only had 72 hours or 3 days. So I always err on the side of caution and report it as soon as you identify it, because you're going to be able to answer many of the questions you need to fill out. So that's the rule of thumb that I've always provided when I've worked with farmers or producers. Don't wait, just report it. So if you've had a disaster and you filed a notice of loss, more than likely we've sent out a loss adjuster to see what we have. You notify the farm service agency when you've completed your harvest, or you told them at the time of the loss that you weren't going to harvest. So based upon your answer to that, that depends on when your application for payment needs to be submitted. It must be completed within 60 days of the last day of coverage for that crop year. And it may be different between crops. We do have multiple crops with multiple different harvest dates. And it's very important to understand when coverage ends on each crop. If you finished harvesting your crop and the final or the normal harvest date is later, once you finish harvesting, that's when your coverage ends. You're going to want to submit your application for payment. So that's why we always ask, if you have a loss, are you going to continue to harvest, or are you done? Are you going to destroy it? Do you intend to go any further with it? So there's a lot of questions we ask through this process, because we want to make sure we keep you on the right path and determine what steps we need to take to assist you to get through to this application for payment. And the last thing that I have is, how do you get started with the Farm Service Agency? We ask that you contact your local county FSA office. They have the information on the farms. They will assist you in determining if you're on the farm, if they need to create a farm, any paperwork they may need to get you in the system. They'll be able to talk through that with you. I know there is frustration with the current COVID situation and what the county office can and can't do as far as appointments. And we are doing our best to work with you and your situation to make sure that we can explain our programs as best as we can while still maintaining the separation that's required during this time. But always start at farmers.gov. You can scroll down to find your local service center, and that'll give you the closest the closest farm service agency center to your location. But also on that farmers.gov, you can find a lot of information on our programs there. So if you haven't already, bookmark that farmers.gov, review the information there. You can use it for more than just finding your local farm service center. And with that, I know it was a lot of information and it really had nothing specific, but if anyone has any questions, I can take them now.
Lisa, we did have one comment from Cindy just indicating that she recently purchased farmland adjacent to existing farm that was established, and that it was a good reminder to update that with FSA since that purchase occurred. And I think that's a good reminder for all of us.
Yep, and that's something that we always like to see. We'd rather you give us too much information so we have it and we can act on it if needed, or if we don't need it, we can let you know. We appreciate you informing us, but that won't affect your farm. So as always, it's better to make sure that FSA is on the same page as you, and any changes that occur. If you have like a entity, an LLC or a corporation, and shares change, we want to know that. So always just remember to keep your farm service agency updated on what's going on to your specific situation.
Question. Hello?
Yes, did you have a question?
Yes, I have a question for starting farmers like me, and being a veteran. We had a year last year, I didn't have insurance, so because I didn't know, and because of drought, I spent a lot of money in some things, and I didn't have water. The place where I farmed I use 100% natural. They don't have water. So there was no rain, so some of the crops died. And as a result, I don't know, do you guys have anything like, although it has passed now, maybe to help cushion some of those losses, or it's too late?
As far as the non-insured crop disaster assistance program goes, it is too late. We can't enroll in our program retroactively. So once that coverage year ends, once that application closing date ends, we're limited on what we can do. So we would not be able to go back and cover losses under the NAP program, the non-insured crop disaster assistance program now for losses from this previous summer.
Okay.
Thanks, Lisa. We only left here, and I don't know if you want to stop your screen share, Lisa, and we can take any last questions, and then we can just put in the chat some contact information should any of our participants have follow-up questions for either the risk management agency or the farm service agency staff that are on the call. And Kazuo will share that we have a quick survey to share with participants, so don't rush out the door yet.
While you guys are thinking about your questions, I'm just going to launch this quick survey. If you guys can help fill it out for us, that would really help us with programming and help us to be able to reach out to you. I will just read the questions out loud. Are you a farmer? Yes or no? Did you learn something new today? Yes or no? Please rate the information that was shared today. A, it was simple. B, it was too much information. C, I would like to know more about these programs on a deeper level. Please connect with me. And if you are wanting us to connect with you, when they share information, and I'll share my information below too, since I'm hosting this, feel free to reach out and give us your contact information, and we will try to pair you with the best person to speak with. And number 4, will you be using the information that you have learned today? I will give you guys a couple more minutes to fill that out. Thank you so much. And you guys are still welcome to ask questions. Don't let this deter you from asking questions. There is a question in the chat about would any of the coverage cover infrastructure like a high tunnel?
We wouldn't have anything for the structure. I think it'd be more property.
So depending upon what it is with the Farm Service Agency, depending upon what's being grown in there, there is the potential for coverage. We do have crops that do require a controlled environment. So it would be something you'd want to, again, discuss with your local Farm Service Agency and let them know exactly what it is you're growing and how you're growing it. And then we can determine if that meets requirements for those crops. So it's possible, but I can't say yes.
Are there any last minute questions before we let everybody go for the night? Well, thank you guys for taking the time to come out on, on a Wednesday night. I know that Wednesdays are kind of hard because it is like the middle of the week, but we just appreciate all of you being part of this. And please reach out to Farm Service Agency if you are a little nervous and you don't know how to do that on your own. Reach out to me and I can get you connected with Dan, who, we also have people who we call Farm Service Agency connectors that we can also connect you with so that they can work alongside with you, along with any agency or, United States Department of Agricultural personnel, so that you're not on this journey on your own. And if you know of any farmers that you think will benefit from this, I'm going to share this link in the next couple of days once I upload it, so that you can share this as well, because it has been recorded. And once again, feel free to reach out to the rest of us, and you all have a wonderful evening. Thank you.
Thank you, everyone.
Thank you.
Thank you.
Thank you.
All right, thanks, Dan. We can connect and kind of talk about this, send me some times and days that work for you.
Sounds
If
good.
the rest of your colleagues want to also chat so that we can do a follow-up conversation about how we're feeling about this. I'm also happy to do another hosting of this in the future if you feel like this is something that we should highlight. We did have over 50 people register, and a lot of them couldn't make it and have requested this for as a recording. So that means people are very interested and they really, really want to know. So just congratulations. I thought tonight was pretty successful, and thank you for doing this.
Thank you for the opportunity. We appreciate you hosting it, and we recognize that we could never pull together this many people to talk about non-insured crop disaster assistance program without you. So we appreciate that.
Well, this is an awesome partnership, and I'll share the polls with you all too when all of this is said and done. So give me till Friday or next week, and we'll have that, or next Tuesday, because we're closed on Monday, but I'll share that information with you all too.
Perfect. Well, have a great evening. Thanks again.
Yes.
Yeah.
Take care. Bye.